All right, EURUSD Weekly Recap. So just going through the week ending on the 3rd of May, 2024. So welcome to another video with Freedom Forex Trading. Getting straight into it. So coming into the week, we had our 15-minute bearish ranges made on the Friday of last week with the news. A little bit interesting start to the week because we had a very aggressive Asia range came and pushed up through and left us in a bit of an awkward spot. We were looking at this area as a I've seen a POI to be able to look to trade from, looking to continue with this bearish momentum and targeting some of our lower points like our decisional on our hourly and our extreme on our hourly as well. However, with that having been mitigated in our Asia session, it did make things a little bit tricky. So coming into London on the Monday, we were positioned here. A very awkward spot to be sitting for London. We did have an internal break here and price had done another internal break, an inducement, a break, and you could look to trade out of this area. However, very low probabilities we're still sitting inside of the middle of the Asia range at this point. So as you know, inside of here is a big liquidity pool. Everything price does in this area is just to manufacture liquidity. So the chances of you taking a loss in that area are very high. So although it was quite clean, still not a high probability setup. So London was a bit of a write-off. Coming into New York session, so about 3/4 of the way through our New York session, we did induce this low. So looking and working inside of that range, we had obviously our internal structure, which is getting broken. We have our main internal low being this one here. As soon as we broke that low, we were looking for buyers, looking to at least come up into this point, induce this, or at least induce Asia higher, potentially coming to the extreme as our hourly 15-minute bearish leg. When price did come down here and induce that low in the New York session, unfortunately, it did just take off. Didn't give you a chance to be able to catch a trade here. And it did just run up to this point and then start to work its way back down. Leading into Tuesday. So Tuesday in Frankfurt, same sort of scenario. Price came down, induced this low in Frankfurt, about on a little bit into Frankfurt, halfway through Frankfurt, and then decided to run straight away. So we did try to catch a buy out of here, but unfortunately it wasn't a opportunity for us to be able to get into the market. It did just run a little bit without us. As price then stepped up and induced this high here, we knew that, okay, cool, well, we're in this internal bearish leg. We've done an internal break to the upside. We know price can potentially come down to here first before coming back up and either taking this high or respecting this high and then following with that bearish momentum. So knowing that we are very bearish, we've just induced an internal high. We were looking for sells inside of here and we did take a break even. So yeah, that was unfortunate as price did do what we thought it was going to do, but just got stopped at BE before being able to have price come down, which would have been a full TP down in this area, bit of a scalp position, and then price obviously came to the upside and juiced up here. Now, this next position, it's a bit of a story of the week in general and how price is moving with EU in terms of very readable and understandable price action. Could tell exactly where it was going to go and what it was going to do quite clearly, except a lot of the time it didn't give us an entry. Inside of this whole zone here, we were looking for a trade. As price came up and induced this high, also inducing this high over here, it gave us a nice leg down. On the 1 minute time frame, you could have tried to catch this, but it didn't meet our confirmations as we needed some further inducements. As price then came up and induced this high with that wick there, we did have a limit set, but unfortunately it didn't quite get tagged in. Price just had other plans and decided to completely just melt off afterwards. So a little bit unfortunate, which led into New York being positioned here after a news release, which was just an awful position to be looking to trade. And you can see it when price is in awful areas to trade, it doesn't give you much in the way of movement. Same thing there, same thing here. And then when we're in good areas, it gives us big reactions. So it's just the way that price moves, and we need to make sure that we're trading in high probability areas and not trading in low probability areas. Now, throughout London close and throughout the remainder of that day, our price did continue to melt, having another break of structure, giving us now a new 15-minute external range, which was from this high to this low. So I can go ahead and remove these now. That's the extreme of the hourly still, so that's fine. Cool. All right. Same scenario. So as price then pushed down, we had our Asia session here. Price then drove the price. Price was then driven down throughout Asia session into our decisional of our hourly time frame. So came straight into this area, which is a really, really high probability area. So we were very aggressively watching price, looking to take a trade out of here. It was a scenario where we were basically looking for any sort of break or ability to be able to catch this entry out of this point, as we knew it held so much probability to give a strong bullish reaction from there. It was a bit before our London session, but that's perfectly fine. Looking to take that trade in Frankfurt. Again, same scenario, and this is the story of the week. Price just took off, absolutely took off, didn't provide an entry. But if you were to place a swing position in this type of scenario, that's where you would have had your swing on it. Off of that point and one off of the extreme. It's only a 12 pip stop, so very, very clean in terms of a small stop for a swing position, and you would have smoked your 1 to 13. So yeah, really, really clean. Logical target would have been to hold it to the high of the range, which is a 1 to 8. So you would have absolutely smoked that, which is really, really clean. It's better to take that throughout the week, risking 1% and take an 8% profit out of that trade. So that's, yeah, beautiful, beautiful swing position. So that was one where, yeah, if you were a swing trader, that would have been very nice. And for those of you watching who do swing trade, really, really good position. If you're looking to be able to swing trade, understanding these high probability areas that we trade from will help you be able to piece those together. Moving on. So price then decided to keep pushing up, came into our New York session, same scenario, in a really bad area, no movement. Price really didn't do much in terms of entries, movement at all. It just chopped sideways and did its thing from there. Throughout the remainder of that day, we had some big news releases. Now, following on from there, this is where we started to get actually some really nice price action starting to build up. So now we have our 15 doing an internal breakup structure, and we have a mitigation of our decisional area, showing some market structure shift with everything that's happened in this scenario. Leading into our Asia session, we were positioned quite high up in our new internal leg. What we were looking for the London session was an inducement of this high to then look for that retracement back down. Price then sat inside of this area, inside of that internal range. Yes, you could have tried to trade this down. Is it high probability? No. Very, very risky area to look to take a sell from. Yes, you're going to be able to take some sells out of here. Yes, sometimes they're going to play out. Trade in these sorts of areas trading at the high after we've had a deep retracement, failed to break, is a very, very low probability scenario. So not the greatest in terms of being able to catch a trade from there. So yeah, definitely something that you want to avoid. Then leading into our New York sessions. So coming into New York, we had price driven down into our internal decisional point. It then gave a very, very nice reaction out of here. 1 minute confirmations, which you were able to get in on, catching that trade, holding it to the high, making sure that you're in on that position, and you're having price hit your 1 to 10. Very, very clean. There was an entry that you were able to take out of this point, which did get missed by about 0.2 pips. GU had a very, very similar entry, which was very, very clean. So a beautiful trade though, getting into this one and making the most of those market opportunities. As you can see, we had very, very readable and clear price action. It was very intentional in terms of its movements and what it was looking for. It's just beautiful price action. Really, really clean throughout the past week. From there, of course, we have our breakup structure. So we have a market structure shift, giving us our new low to this point. We've obviously done everything inside of here. We've now created a new decisional point the price could have come back down to. However, throughout the Asia session, this was NFP Friday, shouldn't be trading this day. Price throughout this session, oops, bad. Asia session, again, making it a little bit interesting. Asia broke, our high came right to the end of our bullish hourly range. So very low probability area to be looking for any sort of position from unless you completely induce the high. What we saw throughout the Asia session was this point here, which is our decisional area for our market structure shift. Price then came in, respected that area, didn't give an entry out here, doesn't fit our confirmations, just following along with price action. We saw it respecting this area and then push its way up. We were looking for sells if we were able to induce the high, which price didn't do until NFP. So yeah, as we got closer and closer to NFP, don't want to be trading that, don't want to be touching it. Of course, New York session, we've had NFP release at the start of our New York session. So not something that we want to be looking to touch. Want to stay away from price when it is having news releases. So all in all, very slow week on Euro USD, really just the one high quality setup. There's some other lower quality setups, I'd call them C grade setups that you could have looked to take throughout the week. Yeah, you might have taken some profit on them. They are, good in that sense if you really want to scalp the market. They're not high probability setups. That's why I didn't go through them and break them down. All in all, slow week. Make sure you're trading at a high probability areas. Make sure you're trading at areas that do hold the most strength in the markets. That's going to lead you to be the most profitable. There's going to be scenarios where you do have price provider entry, but it's not going to meet your confirmations. And, you have your confirmations in place for a certain reason to make sure you don't take unnecessary or stupid trades. So yeah, not something that you want to be getting caught out in as over the long term, taking trades out of areas like this and some of these lower probability scenarios aren't going to do you any good for your win rate long term. So you're better off missing them, making sure you catch the high probability ones, and then moving on from there. Of course, you've got that 1 to 10, which took that higher. And if you took that swing position, that's another 1 to 10. There's 20 half of the week. Just trading at a high probability areas, 2 trades, you're in a very, very good position for the start of your month. So something to make sure that you do take into consideration with your trading is make sure you are trading out of those high quality areas.